Up next, we check on the latest when it comes to the markets. Joining us in the studio on Wednesday was Doug Simon with Trados. Here's our conversation. Lots of combines moving across the corn and soybean fields in the region. What are you hearing? A lot of variability out in the fields?
That's what I'm seeing, talking to farmers. I grew up in Cass County and some decent bean yields over there, but you go to other areas in the state, we had a lot of variability in rainfall, and even irrigated beans seem to be variable this year based on when it was planted, what the hybrid, what the maturity was. So we're seeing probably a lot more variability in the bean yields this year than we are corn. And harvest-wise, we're about 34% done on corn, which is about 3 points above normal, and beans are about 43% done, which is about 6 points above normal. A lot more, beans have been, they usually, cut them. A lot of guys over here in Cass County will start with corn, go to beans, then come back to corn. Irrigated areas, they start cutting beans right away, and so they've pretty much finished those up this week, it seemed like, and going back to the irrigated corn. Mm-hmm. So that's really what's they're working on right now. And then we've got big rain, potentially wind projected for the next 3 days, so we'll have to see. There's a lot of concern about that wind coming up with a lot of those ears that are out there. Hopefully we won't lose that, but the rain would be welcome, but they have been moving that a little bit north during the week. It's maybe not quite as heavy as what it was earlier in the week.
Yeah, nobody wants to see down stocks this time of year, that's for sure.
No.
Well, we can't have this conversation without taking a look at the weekly activities, especially overseas when you add in what's happening. I guess your thoughts on how the markets, particularly the corn and soybean markets, we talk about them might be impacted.
Well, the big question in the Middle East is always oil, and I've been watching oil for a lot of years at my age. But the thing is, a commodity though, is that those commodities, even when there was other wars in the Middle East, that the oil continues to flow. There might be some short-term volatility in the markets, but oil was at a pretty high level here 2 weeks ago, up above 90, and we had fallen out of bed. And then when the news of those attacks came out, oil started trading on Sunday earlier this week, and it was $3-4 higher, and then corn was higher both on Saturday or Sunday night and on beans as well. And then 10 o'clock on Monday morning, we'd been higher earlier and then fell off on the corn and the beans, kind of returning to their trends, lower. So, there's just a lot of uncertainty in the world right now between the Ukraine and Russia, and what happens with Iran, and there's also China and Taiwan. There's a lot of different things that are kind of boiling right now. Plus, the Speaker of the House resigned last week. So I was talking a little bit to you about the bond market, and we had fallen 5% on the bond market last week on the disruption and worry there. And then now with the flight to safety, with the war going on there, bonds are back up 5%, which is, as bonds go higher, those interest rates go lower. So there's a lot of volatility, probably more, and from a size of a market, the bond market is a huge market, and that's kind of been reflective of that volatility there.
Well, back here when it comes to corn and soybeans, I want to get your thoughts. When we talk the markets, we're often talking about pre-harvesting marketing plans, and a lot of folks at this point will have that said. But for unsold bushels, as those are being harvested across the U.S., what are your thoughts on keeping corn versus soybeans in the bin? I suppose the other option is to haul it to town.
Those are good questions. At this point, irrespective of futures, when you go to move your corn or beans, it's looking at basis and carry. So right now there's 15 cents a carry in the corn market from the December to the out to the March contract. So the December is trading at 4.88, and the March is 15 cents higher. The beans are 30 cents higher out there in the defers, to anywhere out to 45 cents higher all the way out into May than the nearby. But relatively speaking, toward their value of the crop, that 15 cents on 4.88 corn is more significant than the bean carry. So if you're going to carry something or store it, the corn market pays you a little more carry. So we're looking at storing those beans now, or storing corn because of that. And then also, where's the relative basis levels going to go? We're a 5 under to kind of 5 over market right now. We were 30 over here just in the last few weeks at, say, Cargill, Blair, ADM, Columbus, but as more of that corn starting to hit the market, the basis is actually falling apart a little bit. But if you look at the Group 3 rail bids, or you go out to December, there's an improvement in the basis levels as you get out there. So there's going to be some returns to storage. However, I just talked about the bond market and those interest rates. When you look at operating notes that are 8% to 9%, you have to really think seriously about storing those commodities, because the money you could put in the bank and stop interest, or if you could earn interest, by putting that money in the bank is significant now compared to the last several years. When you think about where those interest rates were and where they've rallied to, that's a huge consideration. So if you're just going to sit in the bin and speculate, Jim Kendrick always used to say that it's cheaper to buy it back on the board, whether it's corn or beans, and speculate on paper than it is, especially where interest rates are now, just to speculate on what's going to happen on higher or lower futures prices.
I want to get a little bit of a long-term outlook for you when it comes to the price of corn and soybeans. Anything on the horizon that would indicate where the prices might be going in particular? Our viewers always want to know, are things going to go higher anytime soon?
Yeah, that's always a big question. Where's the market going to go? But seasonally, if you look at prices, if we talk about prices trending lower from the spring into the fall, well, if we find a harvest low, if you look at soybeans, they tend to put in a low in early October. And if you look at that into May, they tend to rise. That doesn't happen every year, but if you look at more research, seasonal charts, or Soy Roy, who passed away this last year, there's a lot of seasonality in beans into May. Corn tends to have a seasonal low in October, rallies a bit, falls back down to maybe another secondary low in December, and then tends to be higher into March. So there is some seasonality. The funds are short 160,000 contracts of corn, which they're pretty negative. The bullish bearish sentiment on corn is only about 34%, where last April it was 98%. Beans were 98% bullish last year. Now the funds are only the sentiment's only about 50% bullish. But when you look at that, the funds are kind of neutral on neutral on beans. The commercials, who are the big players in the market, don't have much ownership. Usually they're pretty short about this time of the year because they've been buying corn and hedging it off, but their position's pretty minimal. But so big picture, beans tend to be more volatile post-harvest than corn does. So that's why, if you're going to sell your beans off the combine, I'd definitely be looking at some type of re-ownership strategy through either long futures or some type of call strategy if you don't like just being straight out on the board. Those are some ideas for. And if you got questions about that kind of stuff, a couple guys in our office wrote up a nice report on the soybean market, going forward. If you're interested in that type of thing, you can reach out to us. We'd be happy to talk to you about those things.